Fleet management and vehicle tracking company Digicore Holdings reported a 10% rise in diluted headline earnings per share to 22.2 cents for the year ended June 2011. A final dividend of 3 cents per share was declared for a total dividend of 6 cents per share for the year, unchanged from a year ago.
Digicore market cap 720 million, a price earnings of just over 13 and a dividend yield of 2.1. Craig, hi, let's come to you in Cape Town first. I like their business model in a sense where they're looking to do the R&D in Cape Town, Stellenbosch, just down the road from you, where it's cheap, sell it globally. And they're starting to expand. I get the sense that things are starting to come together for them.
Yeah, look, I mean, they've been investing quite a lot in R&D and other capital expenses, and obviously setting themselves up for growth in the international market. And I think that's where it's going to happen for them. Obviously, if the rand gets weaker, as we've seen this week, that's going to be a good thing for them going forward, and they're positioning themselves well. Spent quite a lot in capital, and what's interesting about their business model is unlike their competitors that outsource a lot of their work, be it installation and monitoring and even to some degree the sales, they like to keep everything in-house. So they have spent quite a lot in setting up those infrastructures internationally, as well as on developers, or as they call it, engineers here in the Cape.
Craig, why was there such a large disparity between the sales growth and the revenue growth? Surely there should be some alignment between the two.
Well, as I say, it's got a lot to do with the increased costs, basically operating costs that they're bringing on stream now for growth further down. So you have seen, as I say, a bit of growth on revenue, although that's also perhaps not where one would have expected, but they've increased those operating costs. So when times are bad for this type of company, they're really horrid. When they're good, they're really good, because they're managing to keep those costs down. And we've seen that in the past with this company.
Yonatan, I want to come bring it to you on the wall. There's the chart just perfectly in time. You're doing this a weekly chart again, a lack of liquidity, and in fact this goes all back to their listing in Q2 of 2007. Talk us through, if nothing else, we're seeing a stock that's going nowhere since, early 2009?
Well, basically, I mean, this is the kind of thing that one would be looking for. It's a nice trading range between R2.60 and R4. You can see this going since the second quarter of 2008. But again, I mean, one needs to be really assessing what is actually happening inside of this trading range. And this chart below over here is the on-balance volume. Now, I've mentioned it a number of times on the show about the on-balance volume.
That's your smart money.
Well, that's the smart money, exactly. And I think just for the viewers' sake, just how it's calculated, it's the sum total of volume. And which means that it's very difficult to split up exactly how many buyers or how many sellers there are in the day. So basically, it's calculated by if the day finishes higher than the previous day, the volume is added to the sum total, and if the day finishes lower than the previous day, then it's deducted from the sum total. And this basically is telling us that on the days that are finishing lower, there's much greater volume than the days that are finishing higher. So therefore, the smarter money is more pressure on the selling side, or is leaving the stock.
Craig, I want to bring it back to you in Cape Town. We had Remgro results out just a little while ago. They used to own a large stake in Tracker, which they sold for 1.2 billion. Does that suggest that perhaps they're getting out of an industry that's become overly competitive, or would we say that really we're not comparing apples with apples here and not worry about what Remgro is doing in the sector?
I think in the general tracking side, there's extremely a lot of competition. But what they're trying to do is differentiate themselves on fleet management add-ons. So it's not just GSM tracking. And that's where basically the engineering and their software development is coming in line. And from that point of view, it's pretty good. They're not the cheapest product in the market, but they offer a lot more than some of the competitors.
Yeah, I mean, you talk about it's driver behavior. They're very bullish on their Discovery Insure, where they're monitoring drivers in a sense. They seem to think that's something going forward. And that's the sort of R&D that you're talking about, where in that space they can record how you're driving, not just where the vehicle is.
Yeah, absolutely. And in fact, they've indicated in their prospects that this is perhaps something that they can take to other insurers globally. I'm not sure whether that will be in partnership with Discovery. You obviously have tentacles in other countries as well. But just the fact that Discovery have done their due diligence, chosen to partnership with Digicore on this one, and it's a pretty unique product in the short-term market. I think there could be some growth even locally, even if they don't get into the offshore market with this product.
Bringing it back to Yonatan on the wall. Yonatan, what are the chances of a break below 260? Could we actually trade in the range, buy at 260 and sell at 4 rand?
I think this is a great range to be trading. Again, one needs to be really aware of the 260 low, and I think that the risk that one is taking as it gets closer to the 260 is a lot less. But I think that there's a higher probability that eventually the stock will break below this according to the on-balance volume. But in the meantime, in the short term, we can certainly look to play the range between the 260 and the 4 rand level.
Craig, back to you. You mentioned that they're more than just the other folks in Tracker and other names spring to mind who kind of put something in your car, GSM, and then leave it. 38% of their business is consumer focused. They really are into fleet management. They've done some big deals with Ekurhuleni tender for 6,000 units. South African Police Service added almost another 12,000. Suppose the consumer's nice, but that real profitability, the real money is going to be more in fleet management.
Yeah, and they've indicated that they're trying to grow that annuity book, and I think, in fact, if you look at the total business, most of the annuity income is lying on the fleet management side, and that's obviously where their focus is and where the volumes are and the growth in revenue. So that's a positive. You know, we haven't mentioned too much of the negative, but what concerns me a little bit is they had a rights issue. And had they not had that rights issue, there would have been a terrible strain on cash, because we've seen their debtors book or their trade receivables increase quite a bit, their operating cash flow decrease a little bit. So there is that little bit of a strain because conditions are not at their best for the vehicle market.
And how do you feel they're notwithstanding the rights issue, Craig? Would you say that Digicore is a hot stock or not?
Well, I'd actually like to see how things play in the next 6 months. So I wouldn't be buying yet. It is a share that I have traded in the past, but there's quite large spreads now, not the liquidity that there used to be, so I wouldn't say it's hot.
Not hot for Craig. What about you, Yonatan? OBV,
no,
smart money on a downward trend. How do you feel about Digicore?
I tend to agree with Craig. I don't think it's hot for the for the longer term period, but I think that certainly from a risk-reward ratio, from a trader's perspective, this is more of a speculative hot for me.
Speculative hot for traders. Simon Brown, how do you feel about Digicore?
I like the company, I like the business, I like the way they do it, but I'm going to be boring and go with Craig. I want to see numbers in 6 months' time. Frankly, maybe even 12 months' time. Let's see it start coming through. All that international expansion. Let's make sure that it's starting to deliver. We're starting to see some money, and let's see some liquidity come back into the share, particularly if you want to be investing rather than trading. So for now, I'm going to say not hot.
Two not hots for Digicore and a speculative hot if you're a trader. Moving on to Cashbuild now. Cashbuild reported a 7% decline in diluted headline earnings per share to 664.5 cents for the year ended June 2011. Revenue was 6% higher at 5.667 billion rand, while operating profit was flat at 239.3 million rand. A final dividend of 139 cents per share was declared, up from 127 cents in 2010, for a total dividend of 296 cents per share, compared with 233 cents a year ago.
Market cap on Cashbuild is 2.4 billion. They've got a price earnings of 14.4 and a dividend yield of 3.1. Craig, coming back to you in Cape Town, we saw the trading update from them. What was it, maybe 3 weeks, a month ago or so? Told us broadly what we were going to see. I must say, I thought the numbers were fairly strong, considering the consumers still finding it tough out there. Certainly, construction's not happening very much, and they're not really in that construction space. But broadly, they're coming through, and they're massively cash generative.
Yeah, no, absolutely. I mean, we had the trading update from PPC today just to give us an idea of what's happening, and yeah, sales are not coming through. We can see that in cement, and obviously it flows to other parts of the building industry. So they've done well perhaps in that environment. If you stripped out the BEE transaction, 50 million odd, which obviously they couldn't deduct for tax neither, it changes things quite a bit, because it obviously now means a 40% tax rate, and if we take that out, you would have seen growth in HEPS of about 28%. So looking in that context, actually these results are not bad at all.
Let's turn our attention to Yonatan now, with the tech analyst standing by. It looks like it's a nice trending share, Cashbuild, but there's some consolidation coming through.
Absolutely, Raphael. I think that the great longer-term trend is still up. It's still very much bullish. That can be depicted by the rising 200-day moving average. Again, the 3-year channel that prices have been trading on. But I think let's just concentrate on from the first quarter of 2011 till now. Prices are really consolidating, and there will be a breakup on either on the upside or on the downside. My suspicions is on the upside, but being a little bit more conservative, I would rather wait for that actual breakup above the 95.50 before I look to go long on the stock.
But what happens if we break below that level?
Okay, so if we're looking at breaking below, first of all, the price needs to close below this 90 Rand level. Then we could be looking at testing the long-term 3-year trend line at that 85 Rand level, and then again I would look to be a buyer at that 85.
Craig, bringing it back to you in Cape Town, I mentioned they're not really construction, but one of the things which I picked up from their statement, I mean, you know, they put their customers, home builders, improvers, contractors, we understand that, and I think maybe in tough times you're more likely to retile the kitchen than build an entirely new kitchen. But they also talk about large construction companies, government-related infrastructure, which says to me that when construction really starts to play, we're going to get a bit of a double whammy. We'll have the consumer back there shopping, and we'll have the bigger builders, maybe not the Marion Roberts, but certainly the bigger builders, coming into that space and also adding to their bottom line.
Yeah, look, certainly they've got the Bucky Brigade market, and in rural situations they're selling there. And you can see from the margins, 22.5%. So you're not probably going to get the very big contractors buying at those sort of margins. But there will certainly be an uptick as the general construction market improves. But as you say, it's quite nice that there is still maintenance and your small home building and your rural development that they're still benefiting from. And I like those margins because you just see a little slight increase in revenue, and it has an effect on the bottom line.
Cashbuild was all about stores, Craig, and it's a model that's certainly working quite well for them. But the question is, there must be a natural limit to the number of outlets that they can have. They've built 5 new stores, refurbished 14, 4 have been relocated, 3 have closed down. How sustainable is all of this?
Well, look, it depends on where your geographic footprint is, and if you expand into Africa, there's a lot of development happening there, and I certainly think that would be the way going forward for a company like Cashbuild.
What we also see is their like-for-like operation expenses only up 5%, which again shows management really being on top of things during tough times. Often in the boom days, those might run away, but what we want to see now is that control. And what it's showing to me, I'm seeing good management come through from the numbers, from the balance sheet, from the cash flow statements, guys who are really on top of their business and really got a firm hand on the tiller.
Yeah, no, you know, look, I've watched this company for some time now, and they seem to get the inventory levels right. They really know what they're doing if you compare them with some of the other operations. And so, yeah, I'm leading towards Hot in the sector. I think it's certainly a nice retail player.
You talk about it, the retail. They're also saying that the first 9 trading weeks, they're seeing 8% year-on-year growth for same stores. A lot of their growth is coming through the new acquisitions. We mentioned that they're going into Swaziland, they're going into the neighbouring territories. And I suppose for them broadly, your supply chain here isn't such a problem. It's not like Clover with milk, getting the product to it. They can broadly take it and replicate it and go into Swaziland. They can go to Namibia. They can perhaps even go a little bit further up into sub-Saharan Africa.
Yeah, they seem to be buying an existing operation there in Swaziland, which I'm assuming is struggling. Unfortunately, we can't see the financial effects of that. They haven't disclosed it, and obviously once all the boxes are ticked, that'll come through. But we know Swaziland, what the story's been like there, and certainly there hasn't been much growth in that country. But there's other opportunities too, Mozambique, etc. And so I like the prospects for the company, even though the growth in South African market might be a little bit confined.
Coming back to Yonatan on the wall, if it breaks below 85 Rand, where do we put our stop loss?
You should have been stopped out already if it breaks below that. No, I think, again, at that 85 Rand level, remember, if your stop is, it will be just below the 85 Rand level, so around the 84.50 or so. But again, it depends on the closing price, not on the intraday period or the intra-period or the time frame that the trader is working within. So again, you know, buying it now and hoping that it breaks on the top resistance, you're looking at a 10% risk at this particular point in time. So it's just a matter of bidding your time and how much risk can the trader take. And everyone is individually, you know, they've got their own risk profile. So one's got to be a little bit more patient, wait for less of a risk to get into this market.
What's your risk appetite then, Yonatan? Do you think that Cashbuild is a hot stock?
Well, I do think it is. Again, I'm going to be conservative to say that if it does break and hold above that 95.50 level, I would look for profits around the 120 Rand level. But if it doesn't break that level, then I'm going to be looking to wait it out till around the 85 Rand level for me to buy.
All right, coming to Craig in our studio in Cape Town. How do you feel about Cashbuild? Is it a hot stock or not?
Well, management's already guided us that revenue in the first 9 weeks or so of this year was up about 8%. We're not going to see that BEE figure in next year. So I think considering that, it's hot.
Hot for Craig. What about you, Simon Brown?
I like it. I have a bit of appetite for construction, a bit of a contrarian view there. And I like Cashbuild. I think it's great looking management. As Craig said, we're not going to get that BE deal coming again, so that will be out of the numbers for next year. They got a decentish 9 weeks. It's not 9 weeks, isn't a heck of a lot, but it's a good start. I like them, and I put my faith in the consumer. The consumer's coming back slowly but surely. They're spending a bit. We're seeing the banks lending a bit more money. We're seeing some of the guys being a little more aggressive there. So I'm going to say Cashbuild, hot for me.
So you're basically saying that a re-rating of the construction sector is on the cards then, Simon Brown?
I am, but don't hold your breath because you might turn blue. I have been saying that for pretty much all year. It will happen. Construction stocks are ridiculously cheap. This year, next year, 2013, you might need a lot of patience.